Stephanie McKay.
And I'm Matt McKay.
We're with Safeguard Insurance. Today, we are going to be discussing frequently asked questions about life insurance. So let's dive right in. Matt, why would I want life insurance?
Well, I think there are many ways to answer that question. But what I would say is every person's a little bit different, but definitely almost universally, you need some kind of life insurance. If you have any kind of, unless you're just sitting on just a massive pile of money, or you have absolutely no one or nothing that you want to leave, then maybe you don't need life insurance. Otherwise, you pretty much need it. And if you have a massive pile of money, you probably want to save money on taxes. So almost everyone needs some kind of life insurance, whether it's just a burial amount of $5,000 to $25,000, or if it's a more significant, like say you have a mortgage or something like that, you need to cover debt, you want to provide money for children, whatever. There's all kinds of reasons to have life insurance, but almost everyone should have some kind of life insurance.
Okay. So how much life insurance would I need?
Well, that was kind of leading into that with some of the response that I just gave. But what I would say is every person's different. Everyone has different preferences and things that they're concerned about. But what we do here at Safeguard is, ask questions to uncover the need. Every single person's a little bit different, every family. So what we do is you look at, first of all, of course, we always think about a burial fund. How much is it going to cost to take care of a funeral and gravestone and all that kind of thing. And also projecting into the future what that may be. If you pass away 20 years down the road, it's going to cost more than it does now. So anticipating those costs. Also, if you're still working, how much are you making? If you die, how much does your spouse need to continue living the lifestyle that you currently are? What debts do you have? Do you have a mortgage? Do you own other properties? Do you have student loans, credit cards, auto loans, whatever? Because if you die, usually those aren't just going away. They're passing on to the next person that would be responsible for that. And then also things like education and thinking about raising kids and who relies on your income. There's some other scenarios too that people might think about. We can get into deeper details in other videos, but it does depend on the situation, and we want to make sure that we calculate that out. And most often we underestimate what we really need.
Okay, that's really good stuff right there.
Thank you.
So what are the different types of life insurance?
Right, so this is something that we really want to be sure that people understand, because first of all, some people in the industry don't have the best intentions or the best way of explaining what someone is purchasing. So some people may think that they have, I've got that their whole life, or I've got term, or I've got that whole, I had someone tell me I got the whole term whole. And I said, what does that mean? Well, a lot of times we don't really know. So we want to be sure, first of all, that if you have life insurance, you know what kind it is. Okay. Ways that you can tell, we can get into that a little bit. But I like to say there are really three kinds of life insurance. The first is term insurance. Basically, it's kind of how it sounds. It lasts for a certain amount of time. And say you look at a 10 or 20 or 30-year term. Whatever that number is, that's how long that rate stays locked in once you purchase the policy. After that time period, the rate goes up. So what that means is, usually the idea is that it's designed to work if you die early, before life expectancy.
Okay. So
the company will give you a much cheaper rate because they know you're probably going to outlive it, but you can cover that mortgage for $300,000 or $400,000 or $100,000 or whatever, much cheaper than if you look at one of the other kinds of life insurance. On the other end of the perspective or the spectrum would be whole life insurance, and again, that's kind of how it sounds. It's designed so you pay the premium and you know it's going to be there your whole life. Whether you pay it your entire life or whether you can pay it up early or something like that, that's another discussion. But it's designed, you pay the premium, it will be there. Therefore, it's going to cost more than a term policy is almost always. In between those two, remember we said term and whole life. In between those two is universal life. And basically, it's kind of a mixture between the two, is what I like to say. It's designed to be permanent, but it's based on something besides just you pay the premium. It's based on either an interest rate or some kind of index of the market, in addition to your premium. It still develops cash value just like a whole life policy would. A term does not have cash value. So again, within these kinds of life insurances, you pay for what you get. If you go on the cheaper end of kind of a term, you're going to pay less. If you go to the higher end, you have the whole life that has lots of features, more guarantees, and universal life usually is going to be a little lower than whole life for the most part, but it's designed to get a little bit more cash value and is a little bit more of a risk than the whole life.
Fascinating. Okay. Let's talk about beneficiaries.
Okay.
Who can be a beneficiary on a policy?
Well, usually the company is going to be sure that there's some kind of interest in the person receiving the benefit. Most likely it's going to be, if you're married, it's probably going to go to your spouse. Or another close family member usually is where it goes, and you can have multiple beneficiaries. For example, obviously, we're married, so on our life insurance, you're my primary, okay, meaning the first person that would receive it if they're living. But you also want to be sure that you have what's called a contingent beneficiary. That's basically a backup plan if, like, say, Stephanie and I are in a car wreck or something like that, or some other accident or something like that. Obviously we die together. If she's the only person on my policy, how's the company know who to send it to? So that's why we have a contingent. So maybe my parents or your parents or aunt and uncle, or, I had a lady that she's older and a lot of families passed away. She's never been married. She has her sister as the primary, and then the Humane Society as the contingent. So really, it just depends on your preference. Another major possibility would be if you're covering your business. You may have a business partner as your primary or contingent beneficiary as well. So all kinds of reasons to have life insurance, and therefore different kinds of beneficiaries.
Okay. So why, you had mentioned in what you were saying that, I'm primary and then have a contingent. You said like a parent or something like that.
Mm-hmm.
Why not use our children?
Oh, that's a great question. That's because our children are a little young to get a death benefit. They're 1 and 3 at the time of making this video. So the company is not going to hand, hundreds of thousands, million, even 5,000 to a toddler because they'll probably just chew on it. But what would happen is if we put Riley and Haley on as our contingent beneficiaries, if they're under 18 and you don't name some kind of custodian that can take care of the beneficiary money or a trust or something like that, it's just going to sit in their name in a trust until they're 18 with the company. And it's not really going to gain any kind of interest or anything. It just sits in an account in the amount that it was. So if you don't intend for that money to sit there and do nothing, then you want to name someone else or have a custodian or somebody that's going to take care of the money in their name. Okay. Sometimes it's okay to put someone on that's maybe 15 or older because you only have a few years, but you also don't want them to be the primary. And you don't want it to be where the full amount is supposed to go to the burial and they're under 18, because they wouldn't be able to access the money until they turn 18. So you want to be careful about your beneficiaries and think about what the implications would be.
That's a good tip right there, something to be aware of. Okay, so for life insurance policies, is a physical exam required?
Right, so this is a big fear in life insurance is, oh, what if I'm afraid of needles, or I don't like to deal with blood, or I don't want to pee in a cup. We have these fears, and that's understandable. Some life insurance doesn't require that. But again, sometimes you pay for what you get. If you're doing a larger amount, usually more than $1 million with almost any company, you're gonna have to do blood and urine. They're not gonna just give you $1 million. They're not gonna say, well, he looks like he'd be okay. $1.5 million, 30 years, no problem. They're going to question things the more coverage you get. So yes, you can generally find something without a physical, but a lot of times it's going to be less than $250,000. There may be a few more, like during COVID, they actually did allow more because they weren't even allowed to go in the house and get a paramedical. They had to find a way to continue to write business. So they would allow some circumstances, but that was extremely rare, and they've backed off of those now. So it's not really a relevant point. Generally, anything over 250 and sometimes over 100, you're gonna have to do a paramedical. And sometimes if you're an older age, maybe into your 50s or so, if you're doing anything besides a final expense type of plan, you're probably gonna have to do a paramedical. So there's a wide range of options, and if you just can't get past the idea of a paramedical, there are options for you. But if you want a larger amount or you need a larger amount, sometimes you just have to do it and deal with it. And I think we can both attest, the people that do it and everything are extremely professional. They know what they're doing.
Yes.
You in particular can be kind of skittish,
yes,
and so
I don't like needles.
They're really good about it. So if that comes up, don't be afraid and don't refuse to protect your family because of fear.
Good stuff. So what would disqualify someone from being able to get a life insurance policy?
Well, I mean, there are certain conditions with certain policies. For example, very common declines on almost any kind of policy would be something like HIV, AIDS, organ failure or transplant, ALS, things like that. If you have that, don't immediately turn the video off, because there are possibilities to cover anything from a young age, 0 to probably 16 or so, and 25 to 80 and even 85 in some cases. And there may be other ways to creatively cover yourself. So a lot of people feel like they just can't get coverage.
Or they've been told that, correct?
Right. Or they think, and I've had people truly tell me this, quote, I've got high blood pressure, I can't get it, I'm a bad risk, or I'm uninsurable. Wrong. If you're under the age of 85, give it a shot. You'd be shocked. You can get immediate benefit if you have insulin. I've seen, we had a lady when I was working with Transamerica, we got a lady covered that has congestive heart failure with an immediate benefit. All kinds of things, and it was completely on the up and up, just so y'all know. I mean, there are plenty of options, and people just don't know that the options are out there, or they box themselves in because of experience, or they've heard rumors, and it's just, it's not true now. There are so many options to get you coverage now that if you have an agent that knows what they're doing, you can find a solution almost always. And it just comes down to, is this what you need? Maybe the price may not make sense if you have some health questions sometimes, but you can definitely get the coverage almost always.
So would you say it's true that individual companies have different underwriting requirements, different some might have different questions and stuff like that? So if somebody has been previously turned down with one company, that there is another company that might take them. Is that a fair assessment?
Absolutely. Now, if you get truly declined, it can create obstacles, but it doesn't mean that you can't get some other kind of policy and maybe get exactly what you were looking for with another company. It does depend a little bit on what the denial was for, but every company looks at things a little different.
Mm-hmm.
Every company is very similar in some ways. There's going to be some things that are fairly true with just about everyone, but there are going to be some massive differences from company to company with certain health conditions. Like for example, something like lupus may be a complete decline for certain companies, just period. You're never going to get it with us. Sorry. But then someone else with lupus could get an immediate benefit at one of the cheapest rates on the market.
Mm-hmm.
So you want to have someone that you deal with that really knows the market and knows kind of what's available, and you want to have a strategic decision when you apply for life insurance, because if you just throw it in and the agent has no idea and they're just hoping it works and have absolutely no clue, then you can get declined for something silly because a certain company just doesn't take this one parameter. But if the agent had paid a little attention, they might be able to put it in with another company with the same rate and get exactly what you wanted. So you want to be thoughtful, and you want to do your research at least a little bit,
Mm-hmm.
or at least have someone that you can really trust that has a process of eliminating certain companies in certain time frames.
Okay. So how much does life insurance cost?
Well, that certainly depends. If you think about it from a company's perspective, they're not going to charge the same rate for a 25-year-old versus an 85-year-old.
Mm-hmm.
It's a different risk. Somebody that's 25, they're going to live for a long time, most likely. Somebody that's 85 is already past life expectancy.
Mm-hmm.
Life expectancy is 80, give or take, 81, 82, whatever. That's the general idea. So if you have someone that's getting into that 50s or more range, sorry, I was just fixing my hair, y'all. But anyway, if you have someone getting into kind of the 50s, the prices start raising pretty significantly, and especially as you get into your 65 to 70, you're starting to get to that point that things can just kind of happen. So the company will charge a little bit more. If you have somebody that's really young, even if they're unhealthy, the rate's going to be less than someone that is in their 60s or 70s or 80s.
Okay.
So a lot of people just think, and one comment that I would make, a lot of people overestimate the cost of life insurance. They just think, well, it's going to be, I have people all the time that I quote and they're like, oh, wow, I thought it was going to be $400 a month for that. And it's, $150, or it's $75 instead of $175. And we just have these thoughts in our heads that keep us from looking. And that's just unfortunate. So first of all, you ask, what's the cost? It depends. Are you a smoker? Are you healthy? What's your height and weight?
What's your age?
Of course, how old are you? What amount of coverage are you looking for? For example, some companies have what's called band breaks, where if you look at $99,000 in coverage versus $100, or $249 versus $250, the $100,000 will actually be cheaper than the $99,000 because of the band break. Basically, there's a few more requirements within that band, and so they'll give you a cheaper rate per thousand because they have a little bit more underwriting with it, or whatever the case is. They'll give you a little discount for buying more coverage.
Okay.
Little tips to look into.
Okay. So, can a person own multiple life insurance policies?
Yes. Yes, you can. It does depend a little bit on, like for example, if you're looking to get large amounts of coverage, like if you're making $10,000 a year, they're probably not going to give you a $3 million policy, because why do you need it? You know, that doesn't make sense. There's things called suitability and things like that they're going to do some basic checks to be sure that what you're doing is making sense. But that being said, yes, you can own multiple life insurance policies. Yes, you can do it with multiple companies.
Okay.
You can get, like for example, final expense is a pretty notorious one that you can get. You know, certain companies will allow 25,000, 35,000, 50,000, whatever. Well, if you have the money and you want to get multiple life insurance policies and you have a little health issues or whatever, that's one way to do it. It can get pretty pricey if you're buying a bunch of whole life insurance at final expense rates. But yes, you can do that, and you can get it from multiple companies. As long as you're not committing fraud and you're not lying and all that, and you fit within what the companies believe in and their underwriting and all that, then yes, you can get multiple policies. You know, and that's one thing that I've seen some is people just think, oh, I can only get one policy. You can get as many as you want as long as you're approved for it. And hopefully you're not lying behind the scenes saying you don't have certain coverages or something like that, because you can get into trouble later. But as long as you're telling the truth, yes, and you have the ability to back up what you say, then you can get whatever you need.
Okay.
Within reason.
That's some good information. So
I'm doing my best here.
we appreciate it. So if you would like to learn more about life insurance, you could search our YouTube channel. You can check our website or our social media pages. We will be back with more content soon, and thank you for staying with us. Bye-bye.
Thank you.